All right, good morning, everybody. This is Cal right here on the 17th of March. Okay, we're going to start our morning MAO right now. Okay, let's do it now. All right, let's have all the love and the happiness this morning. Now, this morning, I just confirmed that we have a full house for our office this afternoon for the revision. Now, that's cool. All right. So those who are coming to office, right, do come up from the level 1. There is a yellow door. All right, come up from level 1. Okay, there's a yellow door. Just come up first. Okay, the door is look close, but if it's open, just come up from down there. Okay. All right. So let's start this morning. Let me now share my screen over. Okay, let's go. Okay, now, yep, 17 March 2021, Wednesday. Today's caption is very important. It's very, very important. Is can we trust the Fed? Now, this is not my saying. Apparently on CNBC this morning, all right, about 5 a.m., apparently all the guests will ask the same question repeatedly over again. Of course, could it be a smoke screen? Could it be just they are doing for the, to get this eyeball? But end of the day is that they are asking whether can they trust the Federal Reserve. Because tonight, Federal Reserve, Jerome Powell, will have to announce and share his view on the current economy, especially the interest rate and the inflation pressure in the market. All right, so that's why I'll be covering a lot of this very, very soon. Okay, so let's begin. Now, all eyes is on Federal Reserve because inflation is going to eat into your buying power. That is for sure. Now, of course, when you put in so much money into the system, obviously, it's all right. You do expect that there'll be inflation. All right, it's very, very normal economic 101. All right, think about this. It's just like as simple. It's just like when you are not that rich yourself, right? You only spend, let's say, a bowl of you spend on your lunch as a bowl of wonton mee, right? Then after that, you strike Toto, or you get given a lot of inheritance and stuff like that, or you have a lot of money suddenly. Then rather than you spend on one bowl of wonton mee for your survival or your, just for your stomach, you spend on one big bowl of lobster noodle, all right? And you wanted the lobster to be live and stuff like that. So what happened is that your cost of living technically increases in this way, in this 101, right? Meaning that it's not for everybody, but apparently because of the easy money that's available in the market, that is what happened. Just back in the 1980s, when the Hang Seng was going crazy back then as well, right? Everybody in Hong Kong was having shark fins, having lobsters, having abalone for lunch and dinner, and of course, a lot of drinking and stuff. And that was the time whereby the economy was going so fast, rapidly. And of course, that was when the 1987 Wall Street crash, the whole market collapsed also at the same time. So, so like it or not, there's always a good and bad when you put money into the system. And of course, when the inflation comes in, the Federal Reserve had to come in next, all right, which is the controlling factor. They would have to come in and contain the market, right? It was contain the market by looking to tighten, okay? Now, of course, Jerome Powell says that he's not going to do that. He keep on saying that he's not going to do that. But the problem is this, he can say what he wants, but the Mainstreet and the Fed funds are showing opposite things, okay? The Mainstreet are telling him that, or saying that, right, there is a very good chance that the inflationary problem is ongoing. And also now it's also telling him that, right, okay, guys, you have to be realistic because if this is going to continue, it's going to be terrible. And of course, there is a necessity to do something because if not, right, when things go a little bit off tangent, right? The problem is this: if you look back, what happened to Alan Greenspan and Ben Bernanke back then, they couldn't control it, and that was the thing went really bad. Okay, so that's why the Mainstreet is getting a bit concerned for this, and of course, tightening is on the cards. Okay, so let's us motivate one another once again. You do not need to wake up every day to be mediocre, right? In fact, I've been saying this, guys, you can become a better person. You can be a better trader. You can be a better investor. All you need to do is just do some planning and do some risk assessment. Again, this is very, very important. So to me, why I do this MAO every day is I'd rather die of passion rather than boredom. This really speaks for me. For me, end of the day is right. In life, you really must have a calling that you think it is, and of course, you follow that. And end of the day is that as long as we really go for something that we want to achieve in life, I think that is very important because life is very, very short. Anything can happen to you, right? So rather than you wait or procrastinate, go for it. Okay, that is my point, right? So this is the how I motivate one another. But before we get into too passionate, let's just remember this disclaimer as usual with what I share. End of the day is right. If the market is going accordingly to the direction, cool, let's just do it. But if not, it's all right. Please ensure that your risk management is in place. Okay, that is very, very, very important. Okay. All right, so now the thing is this, yesterday it was a shocker. The harsh weather temporarily weighs on the US retail sales. My point is this, retail sales came down 3%. Wow, that's a lot. Okay, they were looking at 0.3% last month, right? Suddenly now it dropped by 3% or 10 times, okay? But rather focusing on the 10 times, the market focused on bad weather. So bad weather now is equal to bad retail sales. Good retail sales is equal to economy recovery. You know, this is how incredible this thing is. End of the day is they're telling you that now it's adjusted because of the bad weather, the cold weather, and because of the lack of the stimulus check available. So this is the reason, okay? So end of the day, it is an individual thing. The economy is not recovering, that is a fact of the matter. But rather than focus on that itself, the market rather tell you some things. So that's why they come out and tell you that Goldman Sachs are looking at better numbers, looking at 7% this year. Wow, 7%. But do understand this again, it was because last year was technically terrible. That's why 7% this year is really nothing. But FYI, the stock market did not go up by, it was not terrible last year. In fact, last year itself, the stock market went up by 30, another 15%. So seriously, it is all how about perception of how you see it, okay? Now for tonight, right, Federal Reserve will have to, start their meeting and they will be talking and they will conclude what they say. So by Thursday night, then they will conclude and will tell you guys what they see, Thursday morning, sorry. Okay, they'll tell you exactly what's going to happen, all right? So Thursday morning, Singapore time. Thursday morning at 2 a.m. Singapore time. So likely they will say there's no changes, that's for sure. The 100% thing is that they will say there's no changes, but it's only how Jerome Powell answer and speaks his statements, right? That's very concerning. If he's actually sound that there is a possible chance, okay? If there's any line of that market will actually take some profit, okay? But of course, we know that Jerome Powell, the last time when he comes in, he was very sure of what he says, and of course, the stock market rally. So now everybody is now looking at Powell to actually talk the yield down. All right, the yield have been trading about 1.6% the whole day yesterday, and at the back end, it went at 1.62%. So the market is looking at to press it down to 1.5 again. But again, if it fail, then obviously it'll be a problem because the inflationary is very clear, it's creeping up, it's everywhere. All the reports are showing that. So unless the Federal Reserve is not going to care less what is going on itself and just continue whatever they believe, then that is fine. And of course, if he basically gave a very optimistic economic outlook, right, then obviously it makes more sense to actually increase or hike back the rates or reduce the, do some tapering. So again, it's a pretty dilemma for him to actually to do what he's doing right now. So let's just see what happened later. Now, I'll be covering this story. Yes, I'll be covering this story at 2 a.m. to 2:30 a.m. this morning. So yes, I won't be able to sleep much, but it's okay. I'll be covering it and I'll give you the MAO as it is. Now, 1 year ago, this time, okay, that's about March 17, around this period of time, the stock market dropped by 12% in a single day. Do you remember? In one single day itself, right, the stock market collapsed 12% in a single day. Now, that was crazy, right? If you forgot about this, let me bring the chart up for you guys. Okay, let me just show it to you now live. Okay. Let's go back time 1 year ago. Here we go. Remember this day? Yeah, let me show you this day. This is the wow day. This is the one, man. This day, okay? What day was that exactly? Let's just put it in. It was on the 12th of March, okay? That time, that period, okay? Where the market lost 12%, okay, in a single day itself. Wow, look at it. Now, main thing about this, that time was circuit breaker was utilized, okay? And again, the market continued to fall really badly, okay? So the question is, 1 year later today, what do we see from the market? That's another thing, right? What do we really see from the market? So, well, it's not for me to tell you. End of the day is that back then the COVID-19 virus was ongoing. And back then itself, the number of people getting infected was about 100,000. Today, 1 year later, it's about 56,000. So if you look at it from that perspective, it's actually lower. But you talk about one whole year, that's 365 days multiplied by an average, let's say 50,000. Okay, an average 50,000. That's how many people got hit by the virus. And of course, now you can understand that a lot of people are saying that this 1 year number of deaths of 100,000 people from this flu is nothing. But yes, indeed. But now we're talking about almost 500,000. So seriously, that is what is ongoing right now. But again, people are saying this is different. They think that nothing has changed much because now the market is doing very well. Stock market is going up. There's no reason to be concerned for, and so forth. As long as the Federal Reserve coming with a lot of money, massive monetary policy, stimulus packages, things will be fine. So of course, when you put money into the market in that manner itself, of course, things will be better. So will there be a repertoire of what happened or deja vu? Well, I don't know, all right? But definitely for sure, I give you my concern that I'm pretty concerned from April and May onwards, okay? April and May, I'm very concerned on the stock market. So just play to the whistle, all right? Please look at the market and trade according to plan, okay? All right, so of course now the biggest worry is that, right, a lot of these banks like Merrill Lynch is saying that, right, believe that there's inflation going on and a fair reversal of the low rate is the greatest risk to the stock market. Yes, indeed itself, right? The boys are actually now doing this. So the question is this, how come the boys don't mention this about a few weeks ago? Why only now recently they seem to like in coordinated move, right? So I told you before, in Wall Street, when things they are not ready, they won't say anything. But when the boys are ready, that is where things really have to come in, right? If you remember what I said yesterday on the MAO, you will know what I meant, okay, about this. There's always a willing buyer, there's always a willing seller. All right, so the CBOE VIX indicator is really alarming. Well, yesterday it went down to the 1 year low. The VIX indicator went below 20. Wow, it seems like nothing is going to be bad. Now, the thing is that this VIX indicator is created by after Lehman crisis. So in short itself, right, if ever it goes to 20 and below, usually you can see there will be a instrumental rebound, which means that the stock market will pull back or take some profit. But incredibly, yesterday, the VIX indicator continued to go down despite the Dow was down a little bit because the Nasdaq was up. So because of that as well, right, the question mark is it because that really the piece is in the market right now, there's no need to worry, or because that it is so, everybody's so complacent that if anything happens, suddenly, right, the market will really, go the panic mode. So if you look at the long-term chart of this VIX indicator, the longer-term chart, let's take a look. The longer-term chart itself, right, VIX indicator is not at the lowest end because ever it went down to about 12 or 14. So seriously, if back to 2018, remember that was before the market came off back then, it was as low as almost 10 or 9. So, well, to the optimistic people, they'll say that, okay, there's more to go, so no worry, it is possible. So people who are looking from the general point of where the COVID-19 happened, we are now at the lowest end ever since COVID-19. So two sides of the coin, you decide which side you think the market will be going. But remember this, when the VIX indicator go berserk, right, meaning go above 40, is always a time whereby people get very panicky, and that will be always a good time to buy into the stock market. So this one is something that I need to remind you, all right? So VIX indicator, 19.79. Okay. So let's look at the Dow Jones yesterday. Dow Jones opened, once it started opening from last night cash market, it went down to about 32,800. It tried to recover a little bit towards the end, but it fizzled out, in the last 15 minutes or so. So why? Because everybody's just waiting for the US Federal Reserve FOMC meeting. So once the meeting is over, then of course from there, everybody has to deduce what the Federal Reserve have said. And of course, they react on it. But to me, it's all these are all showmanship. They actually know what to do. They really know what to prepare of. It's just that, just to go with the flow. So let's just go through what happened yesterday, last night. Dow Jones retreat about 130 points ahead of the federal rate guidance, okay? Basically, it's all right. The S&P went down by 0.2% after hitting intraday high because the Nasdaq went up. And Nasdaq, incredibly, initially went up first quite a fair bit, then it pulls back towards the end. Down, it was up by almost 1% before it pulled back. So S&P and Dow is still near the record high, but of course, investors are getting worried because of the interest rate possible hiking there. And the 10-year yield, the last part, it briefly went past 1.62%. That was also the reason why you saw the Nasdaq coming off a little bit. So I've been saying this: the 10-year yields and the Nasdaq is very correlated, very correlated compared to Dow Jones and S&P. So if the yields goes up, the Nasdaq will come down. If the yields goes down, the Nasdaq goes up. So this is something that I need you to remember. This, okay? This is very important. So tonight we have the FOMC, which is yesterday. They already have it already, the first meeting. So today another meeting, and then after that it will be the result and of course the statement and briefing from Jerome Powell. Okay, all right. So market news right now, everybody is still pretty positive, although there was some pullback, but overall the market is pretty positive. And of course, there are some analysts giving the targets higher for Apple and Starbucks. So all of this shows that, right, the market is still pretty positive. Okay, so you must understand this repeatedly from me. All right, I'm telling you guys yourself, the market is still very positive, although the boys are getting a bit shaky now, but the overall market is seemingly still pretty positive. Okay. All right, so let's just do a quick recap of yesterday market. Now, the recap for yesterday, you can see very clearly the opening price was here. And I told you guys that the KSI was red in color. So KSI red in color and the market is near the pivot 2. Then I told you guys, there's a high chance the market will be going to pivot 2, right? Indeed, it really happened. So the market, the theory that I can tell you as early as 7 a.m. in the morning, or like now MAO timing, I can tell you, and you can look at it. And if there's any trade available to be entered based on the rules, of course, you can do what you need to do. So if I do tell you that, let's say, right, example, like the market open near the pivot 2, and the KSI is red, sorry, then the high chance of the market going down to pivot 2 is very high. So let's see what really happened during the day. Well, you can see very clearly that once the market loses pivot 2, you can see that once the market loses pivot 2, all right, the market really come down to KTR -1 level. But of course, were there a signal for shorting itself, right? Well, below OP, look out for sell, but there was no BNB available, so you don't see any much trade. Now, yesterday was a very slow day, so that's why I didn't even bother to do much update. But still, if you follow by rules, this is below OP, and below OP, because the KSI is red, so the tendency of market going down is higher towards the KTR -1, which really happened. Okay, all right, so that is yesterday, pretty slow side. Okay, all right, so with that is the Dow Jones. Let's just look at the technical side right now. Okay, so this is the Dow Jones technical side right now. So again, I draw my trend line and I'm gonna stick it there. Apparently it's all right. We have a little over the top movement right here, right now. Hey, this one a bit off skew. Let me, why is that so? Hold on a minute. Let me just draw it correctly. Yeah, it should be like that. Yeah, all right. It should touch that point, so that will be accurate. Okay, so now we can see that the market on this point, it broke above it, and then now it's seemingly going to test it in. So for technical point of view, if the Dow Jones maintain, it will go further upside. But if the market loses this technical point and loses a trend line, I suspect that it will join back the MA30 again. So the MA30 now at the moment today is about 31,945 level with about 405. Sorry, it's about nearly 900 points from where we are. Okay, 900 points. So, well, I think it's a bit far away, so we don't need to be really concerned for it right now. But still, I've told you guys that if the market has surged up parabolically and the MA had to follow in, then what may happen, if you see what happened previously, you can see that was what happened. The market went up parabolic back in 2020. And when the MA started to surge towards it itself, once the market created a closing below the MA, that was where the market sold off. But of course, at the time, on hindsight, there was a very big indication that it's a BNB followed by closing below the MA. So if this time around, if we can see this again, then wow, there'll be a deja vu effect, right? Okay, so that is the Dow Jones for today. So the MA is really far, so no need to talk about that. Right, longitude chart itself, all it looks good. Okay, this is the new all-time high indicator. So the all new time high indicator, because of the Dow Jones went new high, So what happened is that the 5% now is 31,337. Okay, yesterday was 333. Today is 337. Now, of course, some people have been asking me and repeatedly say this, Cal, you every day is a new all-time high. I'm going to draw this every day. Yes, of course, that's the point. All right, end of the day is this. The question that people ask is that why would you be shorting here right now? What if it goes higher? Now, I want you guys to take something a little look here. Okay, just a mathematical look. Okay, take a look. Now, the market has been trying to go higher. We can see very clearly, but there's a problem here is that the last few 300, 400 points, the market is going up very difficult. It's like climbing an uphill task, and always the closing is the last 15 minutes, the last half an hour, where the market tried to push it up to close at high. It was never done during the day. I mean, it's just like telling you that, okay, the whole day you don't buy it, you don't buy low, and the last half an hour you want to buy at a higher price. Come on, man, it doesn't make much sense in this way. So that's the first concern. Number two concern is that you can see this is the first time after many days the market closes as a black candle. In PTP we call it as negative ROC. So negative ROC, okay, at all-time high, usually it's right. We do see some profit taking, and of course tonight, if FOMC meeting, there is a high chance of profit taking. And last but not least, if you look at the RSI indication at the bottom, we do see that there is a significant resistance and an average of 70. And yesterday we saw 69 point something, so it's about 70 area. So all this reason tells me that maybe these 2 days there might be some profit taking. So rather than you take the stand of still wanting to buy, why don't you do yourself a favor? Just do some SW alpha, shift your stop loss higher to protect your profits. Okay. Now, for people who want to short the market from the top, then obviously it's very simple. You short right now, your stop loss will place at the high, so your risk reward ratio is good. So, example like right now, right? If I say I do a short position and now 32,840. All right, my stop loss will be at 32,000, maybe 995. Okay, so which means that my risk reward ratio is about 100 and about 150 points. Make it simple, make it 150 points. Now, if the Dow Jones really come down to this point here, which is 5%, that will be 31,337. So of course, then the mathematics will be I risk about 150 points to exchange for potential 1,500 point or 10 times return. The question is, will it happen? Now, no one will know that. I mean, this is ridiculous to ask me that will it happen. I don't know. Okay, I really don't know. But it's just a maths question. It's a maths solution here. So it's just like buying a lottery ticket. You buy $1 to aim for $1 million. Of course, you know that the probability is pretty low. But for us, it's with the Federal Reserve involved in this game, and also the inflationary things ongoing, and the interest rate 10 years yield at 1.62%. Yada yada yada. If you add everything together itself, it does make some sense. You understand my point? It does make some sense right here. So of course, traders, if you think that this makes sense for you, right, give me all the love and the thumbs up so that we can see whether you guys actually buys into what I say. But of course, if you think that I am, and this is not the first time I'm saying this anyway, and you think that this is crappy, then of course you can just, ignore this, okay? But anyway, for myself, I'm going to put in some trades later, and if I'm right, I mean, I don't need to aim, I may aim 1,500 points, but I can actually aim lesser, right? So as long as I'm able to do something with this trade itself, why not? But of course, later on, I'll tell you why am I aiming this trade. Right, okay, guys. Okay, while you give me all your love messages, I will get myself a drink. Okay, all right, thank you. All right. Are we receiving lots of messages already asking me, is that right? Kel, are you shorting the market? Let's put it this way. At the end of the day, it's never easy thing to do something live like this. And of course, and someone give you numbers and on live record. So, well, all I can say is if you believe, that will be good. If you don't believe, that is fine. End of the day is that my job is just to tell you exactly what am I looking at in the market, and you will make your own final decision, okay? You will make your own final decision. No one is here to force you, okay? Okay, so the Dow Jones now apparently as I'm talking is down by 15 points. Let's see whether what happened next. Okay, let's look at the weekly chart. Weekly chart wise is still pretty beautiful. So there's no reason to be worried if you are looking at weekly chart. The daily chart itself, I told you guys a new level that I gave to you. That is the May 26th. Okay. All right. This is the 176 days itself. So we are talking about we are at the midpoint of this. Okay, the midpoint. All right. I did mention to you at about midpoint, right? So this is like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So 40 is 2, 4, 6, 7 around here. So this is a midpoint. This is the midpoint of the point here. So if let's say there's any point the market can tell me, then maybe the market will surge up towards it, or the market may correct down towards this. Okay, so there's only two sides of the coin. You decide which side the market will be going because no one can tell you the future. Okay, all these are all basically speculation. Okay, it's just purely speculation. Okay, thank you, Richard, for coming with that notion there. Okay. All right, so that is the Dow. Okay, let's go to the Dow with our chart right now. Now, today, why am I a little bit more to the bearish side? Okay, because three reasons. Number one, first of all, the opening price of today, the Dow Jones opening price is 32,878, which is just marginally above the pivot 2. Okay, marginally above the pivot 2. Okay, so with the opening price slightly at the pivot 2 level, if the Dow stays below the OP, there will be some selling. And yesterday, the KSI was red in color. Yes, yesterday was red in color. So that's why you can see that I'm more towards the sell side. Now, what is really on my mind is because of this. This is what I call in PTP higher low formation, higher low. Higher low formation means that the low got higher each time. Okay, the low very beautifully got higher each time, but the KSI is red in color. The KSI is red. When you see this combination itself, right, usually the market will be a sell, but not just by itself, but there's a one good important condition is that it has to break low. That means that the market has to break the low of the previous day, which is here. The market has to break the low of previous day. So the previous day low is at 32,787. So 32,787. So only when the Dow Jones goes below 32,787, then the what they call the traders will start to really look into the market, and that will be our panic button. All right. So 32,787 is a very critical level for today. If the Dow Jones can break below 32,787, then I do suspect that the Dow Jones may pull back a little bit today. But of course, again, tonight is Federal Reserve meeting, and who knows, Jerome Powell will come and change the whole thing again. So traders, you just have to do your own analysis. Okay, you do your own analysis, you decide. Okay, my job is to just tell you exactly what to look out for. Okay. All right, so that is the Dow Jones for today. Let's look at the Nasdaq, shall we? A quick one on Nasdaq. Well, the Nasdaq has basically propelled higher, broke above the MLP, so it went higher. Then today, MLP is somewhere around here, which is now is trying to test it. But for people who are PTP trained, those people are PTP trained, you know that 13,319 is a very important resistance. All right, it's a KSL, right? 13,319 level is a very important resistance level. If you remember that KSL, and you can see that yesterday the Nasdaq missed it by just a fraction of it, just by a bit itself. So that is the very important resistance in the market, cannot go above it, right? Usually there might be some profit taking. Okay. So Nasdaq wise is like you can still going up, so no much concern. But if you look at the MA, then you can see very beautifully the MA yesterday, the Nasdaq touches the MA and rebounded. So now for today MA, I'm gonna put it in. Today's MA is about 13,060. So that is a little bit away, but not too far. 13,060. So as long as the market stay above MA, all is good for Nasdaq. But if not, it's all right. Then Nasdaq 13,060 will be a resistance level, a support level for the traders to watch out for. Okay. All right. So traders, you can take note of that. Okay, so that is the Nasdaq for us. And let's look at the Hang Seng right now. Now for Hang Seng, yesterday it was beautiful. Hang Seng came down, hit the MLP beautifully, and staged a pretty strong rebound. A pretty strong rebound there itself. Okay, so that's why the MLP is very, very powerful to use. So today's MLP is even tighter as a doji. In fact, so two dojis already. So what is the market going to say? With the two dojis, usually we expect there to be more directional move today lah. So today, Hang Seng do expect some directional move. The resistance for today and the MA30 is this level here at 29,000. 391 level. Okay, 29,391 level. That will be the Dow Jones, Hang Seng resistance level, 29,391. Okay, so watch out for that, Hang Seng traders. Stand by for that. Okay, Hang Seng traders. Okay, so that is Hang Seng clear up. Okay, so DAX, how about look at DAX now? Okay, quick one on DAX. DAX basically yesterday again touched my trend line. You see how powerful this trend line. You see that this trend line was drawn basically based on the two touch point back then in 2017 and 2018. This was based on a two touch point here. All right, incredibly, after 2-3 years later, the touch point came in again, and it beautifully connected the highs recently. And this is really incredible. Let me expand the chart a bit for you guys. You can see that this is really, really incredible stuff, because you can see that it really touches it beautifully. And of course, 2 times already, it touches the trend line twice. So one more time, if the market failed to stay above it, right, then there might be some profit taking. I repeat, DAX may go into profit taking soon if the market cannot stay firm above MLP of yesterday. So MLP of yesterday itself for DAX is about 14,535. So all I can say is this: if the DAX cannot stay above 14,535 today, DAX might be seeing profit taking all the way to the MA level, MA30. MA30 level today is about 14,185 level. Okay, so for DAX traders, today might be a very important day for you to stay on screen to watch the market closely. Okay, you do not want to be caught on the wrong side. Okay, clear? All right, so now we are 9:03. Still a lot of time to do gold. Yes, indeed. Having morning MAO early is pretty good, right? Yeah, indeed. All right, so let's look at gold right now. Now, gold basically the entire day was pretty sideways. Of course, periodically there was a sudden surge at from 3 p.m. or about 8 a.m. Singapore time. It went all the way up, okay, to 1740. It was a very strong move, $13. But after that, once it hit 1740, because there was no fundamental in the market, it was more like a dollar play. I saw that. And of course, straight away, the gold plunged back all the way down to where it started. So it's a bit of flushing in the market, a lot of flushing. It means that it's either that you can say that it constitutes to people trying to push to fake the buyers to go in so they can dump on them, because the upside took quite a while. You see that the upside took almost how many hours? See, the upside took about probably 7 to 8 hours. Okay, 7 to 8 hours of upside, right? And you look at it within 2 hours, they flush it down to where it started again. So that means that, right, the market is actually trying to basically capture the buyers in. So of course, if the market can go back up to 1740 again, that means that this movement could be all fake. That means the buyer are genuinely strong. Okay, if the market go back to 1740, that means the buyers are genuinely strong. But if the market fail and bridges 1720, then of course that means that all this movement initially here itself, right, from the buy of 7 to 8 hours, right, this whole buy up itself, right, is actually a trap to trap the bull. It's a bull trap. And if the market break 1720, we could actually see the market selling off quite a bit. How much would that be? Well, mathematically, how it goes up is how it comes down. So that means that the gold price can go back down to 1700 again. Right, the gold price can go back down to 1700 again. because of, okay, to be precise, 1703 lah. So if the gold price loses 1720, gold can come back down to 1703. Now that is purely by TA, okay, pure TA. I haven't gone to on own chart yet, but at least this is what I can see right now, okay? So this is very important. I hope that you guys can take this advice, and hopefully you will prosper from this trading on gold today. All right, okay. Right, Hang Seng open in about probably about 9 minutes time. So I got no time. I still have some time to do the goal. So now what happened is that the market is saying that they are not very convinced by this. They say that the Federal Reserve meeting is coming up, so they want to wait for a while. And of course, there are some saying that because the economy is recovering in China, so there's a lot of people saying that there should be some profit taking. And they also say that, right, because that gold now is having resilient because of the US dollar coming up, okay? So all these are the news available. You can go online and search for them now. All these are the news in the market. Okay, so for me, let's do a short recap. Again, what happened on yesterday's market, pretty clear. The opening price yesterday was nearer to pivot 2, but because the KSI is green, so very simple, if the market goes above OP, it will go towards the pivot 1. And it really happened. The pivot 1 was at 1739 and gold went to 1740, right? So for 1 to be precise. So that is how it works. As long as the KSI is basically there, you can use the KSI to help you to trade towards the direction. So I repeat myself, if the market opens between the two pivots, right, between them, and if the market is near the pivot 1 and the KSI is green, it's a very high chance that the market will go towards pivot 1. So in this case, it's all right. The market opens near pivot 2, but as long as it stays above OP and the KSI is green, then there is a chance that the market can go towards pivot 1. So it's pretty simple, right? That's why I say the pivot is very powerful. It's one of the most powerful indicator that I created, and you really need to follow it. It's going to be very exciting, okay? But of course, it's not every time. Of course, when the range is tighter, the probability is higher lah. Only when the range is tighter, okay? All right, cool. Okay, so let's just continue now. You can see what happened during the day itself. So the whole day it was just marching around. Then once it hit pivot 2, it just couldn't go down. And then CCRY came in. And then after that, the gold just bought some momentum. A BNB pop up, a BNB followed by a color change, CCRY. Then after that, the market has never went down below OP, and the market propelled all the way up to KTR +1 and pivot 1 at the same time. So you can see that the market really know the OP is there. They know that what they are doing, and they do the BNB. And when it's all ready, when the firing power is all there, they go for it for that particular good trade. So traders, this is how you can use the system to your advantage. And that is how you win money from the market, okay? All right, that is for gold trading. But if not, the rest of the day is pretty flat. So gold is a doji, right? Closing, right? So we'll talk about gold in a very short moment time, okay? Let's look at gold right now. Now, gold today in the conventional chart, gold today is the MLP is even tighter. It's almost a flat line. So MLP for gold today is 1731 around there. And the MA30 is about 1742. So it's very near to yesterday's high. So upside wise, if the goal is to go up again, then gold will go towards the MA30. I repeat, if gold goes up, it will test the MA30, and that's 1742 level, okay? So that is gold on the conventional. If gold do come down, then of course gold can come down to many different areas. We can be about 1703 I mentioned earlier. So okay, 1703, the level that I mentioned earlier. Okay. All right, but other than that itself, right, it's still both. I mean, based on the MA, it's pretty bearish, lah. Okay, for weekly chart itself, right now you can see that again and again and again and again. Now the weekly chart basically triggered the 1689 support level. I have can see on the chart two times Basically, right, it happened in 2 weeks. Okay, it's not a touch and go. In fact, it happened twice. So if you miss the first trade at 1689, the following week itself, right, you have another 1689 to buy again. So that is not saying that we didn't inform you. It was repeated, and on all the MAOs, I've been repeating and repeating and repeating. So as long as the market stays over 1689, there is a fairly good chance that the market is still at the positive level. So watch out for this. 1689 is a very, very crucial level. So some people ask me, Cal, can I put a buy limit order at 1689? I will say that don't do that. Put a call level. Call level means that if the market goes to 1689, you basically look at the market to decide. Because if the market have been strongly support 1689 for 2 weeks in a row, right? Obviously, right, playing the devil advocate, right, there is a possibility that the market may tear it down this time around. So again, all of this is very possible. And of course, the fundamental will play a part. So if the fundamental plays a part and the dollars have to strengthen across the board, right, then obviously going down below 1689, it is a fairly possible. So this one must come with fundamental. Okay, so traders, you need to be very sure of what you're doing, right? Don't just because you saw some people like MTrader buying at 1689 and profiting from it, you just jump in, just say, okay, fine, next time 1689 I also buy. Now that's a wrong thing to do. I repeat, by doing that is a very wrong thing to do. Okay, don't think that don't chase after it. That's what I have been saying. Don't chase after it. Okay, make sure that you know what you're doing. So the longitude chart itself, right, you can see that the gold is going to touch my MA. This one is what MA is this? This MA is MA 30 earlier, as I mentioned. Okay, so this one's as long to show you the chart view that it may actually bring the gold back down to 1669 or 59 level. 59, let me just correct this. Okay, somewhere here. Okay, 1659 level. Okay, then for silver is coming off, and I told you guys, silver basically went to touch my trend line, the trend line that I draw. You can see that, a very powerful trend line that I draw since May and 2020, and I extended it all the way up the south. You can see now very clearly the market couldn't go above the trend line, and now it's coming off, right? So for silver, watch out for the MA 200, because the last time when silver hit the MA 200, the market rebounded. But like I say, once again, when it is so strong as a rebound, we can take this chance and see whether we stay. If we stay, the market will recover again, so you buy. But if the market breaks below it and doesn't seem to stay, then you must cut and turn short. So this is a very, very important level that you have to watch. So I'm going to write it down for you. For silver, the MA 200 now is at $25.40. So as long as the market do not break below 25.40, if you buy at a lower price and the market recover from there, good, you may bought the bottom. But if the market basically touches 25.40 and still go lower, that means that the market has much more downside potential. So traders, you must be very careful on silver, and of course gold movement will basically move silver too at the same time. So all clear? All right, Hang Seng is going to open pretty soon. We will cross to Hang Seng shortly. All right, let me just get myself ready for Hang Seng. Dow Jones is at 22,849. No much movement yet. We don't expect the Dow to move much unless there's something ongoing, or maybe the yield just shoot up by itself. If not, the market will be pretty flat for this morning. It will be pretty flat this morning. Okay, Hang Seng is going to open in about 30 seconds time. So let's stand by on Hang Seng. There we go. Hang Seng is going to open up very soon. Okay, Hang Seng yesterday closed at 29,053. It's a CCRY anyway. So traders, if the Hang Seng good news, Hang Seng may actually go higher. But with the Dow Jones down a bit, 160 points, maybe there might be some profit taking this morning. And the KSI is red, so not that favoring to the upside. But let's see the whole market. Once the market open, that'll be better and clearer. Okay, Hang Seng is open in 3 seconds time, and it's open. Hang Seng open, gap down. Hang Seng gap down. So Hang Seng gap down to 29,29021. Yesterday closed at 053. So no much changes. Excuse me, no much changes. But the KSI is red in color. So there is it's a higher chance for the Hang Seng to actually trade towards the downside. Okay, trades towards the downside. Now, is there a pivot there? No pivot today. Again, I repeat, today Hang Seng got no pivot. No pivot. Now, yesterday there was a little bit concern. My pivot was there. Yesterday also no pivot. Yesterday Hang Seng no pivot. Just that my memory was there when I show you live. So the thing is that when the market opened, right, the pivot couldn't react. So today, the opening price will be the main detector. If the market stay above OP, generally the market may go higher. If the market stay below OP, there'll be some selling. But because the KSI is red in color, so I will say that the market has a tendency to go down. Possibly going down is higher. Okay, to KTR -1 to KTR -3 is all possible. Okay, so Hang Seng traders, this is something that I can tell you for today's trading. You just have to follow the OP to make your decision. Okay. All right, follow the OP, yeah? Okay, if you follow the OP, then if you look at Hang Seng 5-minute chart, Hang Seng 5-minute chart is a CCYR right now. So will there be a possibility to see Hang Seng trading down to KTR -1? It's possible. KTR -1 is 28,928 level. So that is a first level that the Hang Seng may go. The next level that Hang Seng may go also will be the next level, and that is the 28,835. Okay, I think that there is higher chance. So the market may hover here, but because the KSI is still green in color, then after that, if it come down, right, it may touch this figure, 28,835. Okay, it may only, yeah. So we have to see how the overall picture goes before you jump in. Okay. So traders just play to the market and trade with rules. Okay, right? We are just about 2-3 minutes away from the engagement. Remember, KSI is green at the moment, so you just reduce your size. Okay, this is very, very important. Don't just randomly jump in without following the rules. Okay. All right, so that is Hang Seng for you guys. Done. Okay, so now we come to our Bitcoin. Now, yesterday, Bitcoin, again, it was a very favorable day for us. Total, there were 5 trades available. One didn't get to trade because the market, although it is a CCRY, but it did not go above OP of the entry bar, so you couldn't enter, so you couldn't trade, nil trade, sorry. And then, of course, there's a loss. Okay, with a loss, we try to buy here, but the market came down, stop out. But the remaining was very good. Look at it. The remaining was very good. And Bitcoin came down to 53,000. And I told you guys, any pullback on Bitcoin could be actually a buy in the market. And apparently it really happened. Bitcoin really came down and then recover from there. And now it's back to 56,000 again. So it's a very strong. I mean that basically the demand for Bitcoin is really incredible. The demand is really incredible. That's why a lot of traders really want it. So every pullback itself, right, the market keep on buying. So it's really relentless. I put it this way, really, really relentless. So let's look at the Bitcoin, shall we? All right, Hang Seng is still coming down a little bit. Remember this, the Hang Seng itself, the KTR -2 is 835, okay, 835. All right, do understand this. These are all the KTR level, the standard deviation. If you're trading with any broker, actually like AIMS, you must maybe consider put a bit of the spread inside there to make sure you lock your profit, just in case. You don't want to, just because of the spread, you miss out the trade. Okay, that'll be very sad though. Okay, for Bitcoin day chart now, Bitcoin day chart. Wow, interesting. This is something interesting. All right, Bitcoin day chart, the opening price is actually above pivot 1. So by right, it's all right. By opening above pivot 1, above OP is a buy. All right, KSI is green and there's no blue bars at the bottom. It's very bullish. But the market for Bitcoin now is trading below OP. So if the Bitcoin goes below P1, then there might be some profit taking. And of course, if Bitcoin go to profit taking, it may actually inform trader that it's because that in general speaking, maybe the market itself is weak. Okay, the market may be weak, but in general. Okay, so you guys can look out for Bitcoin. If it basically hit the pivot 1 and rebounded from there, then all the CCRY on the Bitcoin on the 5-minute could be a very good time to buy into Bitcoin. Okay, so today is a very interesting day. It could be a very good one. Oh, did I miss out the PSV gold chart? Oh, sorry, I missed out. Sorry, apology on that. Okay, got a bit excited. Paise. Okay, sorry, yeah, let me just bring back to gold. No, forget, sorry, mistake. I'll be distracted, yeah. Okay, for gold today, today for gold day chart a little bit problematic. Okay, for those who are gold lover, today the opening price is actually below P2. So below 1733, the opening price 1731, but KSI is green in color, so this is what I'm going to take. The market opens nearer to P2, right? And KSI is green. So if the market goes up, it will test the P2. So if you're buying gold, you can look gold to go up to 1733 if you're buying. Okay, based on rules on intraday, you're buying gold, you can aim it at 1733. Okay, that's first thing you can consider. But if the market touches the P2 and go higher, then let it run up. It may go to all the way to 1738. It may go to 1738. Okay, it may go to 1738. So this is what I see for gold. But if gold touches P2 or worse, stays below OP after that, well, then that is bad. Then gold can come down to 1717 again. Because 1717 is my circuit breaker, my TSCB indicator, and you can see the incredible accuracy over the last few days is really powerful. Whenever the market stays below, hit the 177, it will stage a strong rebound. So they become a magnet too. So if gold prices come down below OP, then 1717 could be the target for gold today. But because the KSI is green in color, so likely it will not stay at the day low. So if you are shorting gold, do remember to buy back gold at good prices, because it will likely will not close near the day low. Okay, so this is very, very important. All right. So this day chart analysis, I hope you like it. If you like it, give me a thumbs up. And I think this is very good for gold traders. Very clear, right? Very distinctively, I tell you what you can look out for and what are levels to aim for. I think this is a very good numbers for you to watch out. Okay, you can screen capture this. Okay, and then you make sure that you follow through today. Okay, cool. All right. Thank you guys. Okay, all right. And that is gold. Okay, I'm done. Bitcoin also done already. So I'm going to go into my second part of my MAO, which usually probably the not so nice charts and stuff like that. But of course, these charts are all coming from the big boys like Bridgewater, like the bank. So if you want to stay on to look at this, you can stay on. If you think that you have enough, you don't want to be be confused by the market, you can now basically exit. Okay, you can exit now. I'll see you guys in 10 seconds time for those who are going to stay on. That's my son. Okay. All right, 10 seconds is up. Are you still with me? Or are you still with me? Then I continue my sharing. Okay. Now, the thing is this, end of the day is that my job is to just basically every morning, I will wake up at about 4:30 a.m. nowadays, or 4 a.m. actually. I will wake up 4 a.m., then I'll read through everything, all the news, and go through everything. Then by 5 a.m., I start to tabulate what I want to share this morning. I get myself ready. And then after that, I do my PowerPoint presentation, do the animation, and prepare by 8:30 a.m. Okay. So end of the day is that some people actually say this is like, I'm getting a bit too pessimistic in the market and stuff. I've been telling you guys, I say that it's not about that. It's just about rules, and I'm just informing you. Right now, the Hang Seng is coming down. It's going to breach KTR -1. So if Hang Seng is a CCYR, right? So it's a CCYR short. I told you Hang Seng will stabilize here for a while. See, it's really happening. Only later on, then maybe it will come down like that. So you can see that this is really genuine stuff. And whatever I draw, those lines not draw for fun. By drawing, when I draw it sideways, I'm telling you that the market will be consolidating for a moment first. Because the KSI is green on a day chart. So it's going to take more than that to just bring the market down. Unless the market is a KSI is red in color, then usually there will be a follow through sell. So you see, you have to trade according to the market sentiment and just not randomly or see that the market is down, just sell. I think that was different. You have to feel the market, and that is very important. Okay. All right. So let's just begin. Now, Bridgewater, right, the biggest or the largest hedge fund in the market, right? right, in trillion of dollars apparently. Okay, sorry, for 500 billion. Sorry, Bridgewater itself, right, is saying that the world is on the verge of new inflationary wave that could force the Federal Reserve to raise rates earlier than planned. Now, this is from Bridgewater. So you can don't trust Cal or anybody, but Bridgewater is one of the top guys in the market. But of course, recently, obviously, Bridgewater is the CEO, is the chairman is actually Ray Dalio, and Ray Dalio last year was not really performing well, undeniable. The Bridgewater fund was down. So again, when people are down, people usually just say, oh, this guy is down, don't believe in him. But you look at his track record for the last 20 years, oh my God, he's a genius. So to me, it's just like trading, okay, like our indicator, right? We have been right and right. Maybe 1 day or 2 days or 3 days we are wrong. People will have to rub us away and they'll say we are lousy. Then after that, it's right. And then the next few days again, we make money. But of course, these people will no longer be there. So that just same thing as when we talk about the 1689, there's a very strong support in gold. We've been saying this before even gold goes there. And after that, for gold, for 2 weeks in a row, it was there for 2 weeks. And we will keep on reminding traders about that. You can buy if you want to. Then again, people don't do that. So it is very normal for people to behave like this because it's very normal for human to be skeptical. They don't really believe. And compared to the olden time where people trust each other, nowadays people just cannot trust because there's too much scams and shit in the market, undeniable. But still, end of the day, for Bridgewater, it doesn't make sense for them to scam the market because we can see it's very clear. Now, I purposely actually bought into Bloomberg. Yes, I paid for Bloomberg, okay, to get to see Bloomberg chart now. I don't need to, wait for the stupid 3 article thingy. So I get to see this, and it's very, very clear now that the 5-year US break-even rate is now at 12 years high. The last time we see this was back in 2008, before the Lehman crisis. Again, we are back to the same level before Lehman crisis. So Bridgewater has long sounded the alarm of holding bonds. So what they are doing is that they are moving their hedge fund now from the nominal market debt, meaning on the bond market, in short, they move it to inflationary linked notes and gold. Oh, this is interesting. They are buying into gold. So now look at it. That means that if later on, if gold price do come down, right, you have the big boys with you. So what are you scared of? So I told you guys that I'm actually very confident in gold. Very confident that if gold ever comes down significantly, it will be a very good time to buy gold and keep. So I hope that you hear me out right, okay, on this here. So this is the 10 years, then the 2 years. This is actually from Norman Trader, but because I corrected a bit, I added a lot of stuff inside there. So I don't want to discredit Norman Trader, but this chart, the blue and red that is from him, but the yellow color drawing, everything came from me. So let me explain to you how does this work, okay? So this is the 10-year yields, all right, versus the S&P. So since back in 2000, when the 10-year yields, start to creep up, right? Initially, when it come down, you can see the stock market goes up. That's very normal, right? But when the yields start to go higher, right? You can see when the yield goes up, the stock market actually comes down. Okay, but that is basically following market forces. So when it happened again, in 2007, when the yields goes up, the stock market came down. So basically, everything is going according to plan, based on normal market mechanism. All right. But of course, ever since 2011 and 2013, it's all right, things have to change. When the yields goes up, the stock market go higher because the economy was doing well. So if you differentiate, when the market is doing well, economy is doing well, it will move in another way. But the thing is this, as we all know now, in 2019 to 2020, right, the yield came off, right? The stock market goes higher. Okay, that's expected because the market from 2018, a huge amount of money was pumped in the system. That's why. But the thing is, after the COVID-19 issue, right, we had the market going down, the economy not doing well. We're in recession right now. Yet the yield has went up so much, the stock market went higher. So become a very big question mark. It become that it doesn't make any sense in any way now. Because previously over here, the economy was doing well. That one understand. This is a free market mechanism. That's why the market pullback, we understand. But now today, we are at a new paradigm whereby both things doesn't meet. And when this two things doesn't meet, then of course, the thing next is that will it hit 1.7%? Now, because last time when it hit about minus 0.2, the market already basically recovered from the bottom, right? So now is that going towards 1.7, and 1.7 itself, right? Okay, could basically be an alarming point because you see this, this is 1.7. I did a simple drawing for you. You can see now at 1.7, okay, around there. Oops, it went skew off already. me draw it better for you. Okay, now we're at 1.7. Can you see that? Yeah, okay, a bit off again. Sorry, a parallax error. Okay, 1.7. After that, the market did came off a little bit at 1.7 range. You see that? So this 1.7 could be a very instrumental one. The last time when this happened, the S&P dropped by 200 points or 10%. So would this be actually coming soon for a 200 point drop in S&P? If S&P drop by 200 points, the Dow Jones will be down by 1,600 points to 1,800 points, roughly around there. Okay, so this one is a very important chart. Maybe you maybe want to take a look at this and capture this for yourself. Okay. All right, this is really, that's why I say I don't want to discredit Norman Trader, but this is my personal perspective, my own views on the market. So if you buy it, that'll be okay. If you don't buy it, it's also fine with me. Okay. All right, so let me just do my own screenshot also. Because I scared that I forget what I write. Okay. All right, so that is the 10-year yields versus the S&P 500. And of course, now in the CBOE put and call. Now, CBOE is an exchange, right? So you cannot lie about this. You cannot lie about this. So the CBOE put and call ratio now updated is that, wow, really is at 16, 17, 18. We are basically at almost 16 years low. 16 years low. Oh my God. That means that the market is really have nobody buying put and hell lot of call. That's why you can see the 0.375. That means that for every one put is 3 calls. That is how it is being the news here. So think about this. Why there's so many calls? Because everybody's in the ups, everybody's in the buy side right now. But the problem is the Dow Jones is like having great difficulty to climb up, right? So that's my point. When everybody's on the one side of the town, you need to be very, 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 very careful, right? Wow, is it the Dow Jones? The Hang Seng has dropped. Let's take a look. Wow, congratulations, guys. Well done. Hang Seng has came down to our level. Wow, congratulations. How many of you have made money from the market? Have you made money from the market? From Hong Kong? If you have made money from Hong Kong, all right, please key the word made. Okay, MADE. If you have made money in Hong Kong, congratulations. You see that? Wow, incredible, right? Serious, this is really incredible. We are able to do live trading just like that. And just by how many minutes, 15 minutes or so, we have already profited from there. Congratulations to those people who make money. All right, really, really incredible. All right, see Hang Seng now is really pouring down. The next level it could be hitting will be 28,742. But do note when it goes there itself, because the KSI is green in color on the day chart, do expect some support there. That means there might be intermittent recovery, okay? All right, there might be intermittent recovery. Congratulations, guys. Those who made money, congratulations. Wow, happy for you guys. Really superb, right? Really incredible. I'm so happy for you guys. You know, it's this stuff. I mean, end of the day, when you make money, I don't get a single cut on it, but I'm happy for you because it comes from the heart. And indeed itself, this is something that you really must understand. This is really incredible. Thank you guys for updating me too. Okay. All right, so congratulations, guys. Okay, now this is the aggregate bond futures, and you can see that the bond futures, they are really dumping it quite a fair bit. So when the bond futures are down, means that really that the people are not buying into bonds market. And this is another reason why I'm telling you this. Those people who say that the bond market is oversold, I think they are wrong. I think there'll be more selling in the bonds market, and that means the yield will go even higher. Maybe the yield hit about 1%, hit about 2% to 2.5%. Maybe it become a little bit more alluring for people. Maybe that is whereby people look to buy into the market, right? Because that is what we're looking at it, because that it makes sense, right? But if this is coming from my mouth, how about this guy? Now, this is Bill Gross. Now, Bill Gross, of course, he is, he's lost his sunshine a little bit. Back then, he was the king of bond market, king of bonds market, okay? And the time when he said anything on bond market, it will move. But towards the later part of his life, apparently, it's all right. I think people read his game. The elephant got too big, and bit of pride and ego involved, he was to go very, very wrong in the bond market, very wrong. But now he's back and is no longer under any company. He's on his own in a way, I think so. He is now saying that, right, there is a possible chance. Oh my God, I almost fell down when I saw this. He's saying that the inflation will be 3 to 4% in the coming months, not years, months. Oh my God. And this one is a 17 March article, which is this morning, okay? I bought it from Bloomberg. And he just made money from GameStop. He was actually wrong in GameStop initially, but after that, he held on his position and made back $10 million. Of course, when you have money, you can do that. But the point is this, he's saying that he's doing a 3 to 4%. Oh my God. Now imagine this is 1.7% already. We're looking at the market being so crazy. And if they go to 2.5% or even 3%, oh gosh, I can't imagine that. But I'm saying that it's very possible. We all know that lumber prices went up, crude oil prices went up, our basic commodity has went up. So many things has go up itself. How can you tell me that's not? And now with 1.9 trillion going to the market again, the probability of this going to go up is even higher. So he's saying that 3 to 6 months to 12 months time, it is a possible 3 to 4%. Oh my goodness. Serious? Is he serious? So he actually did something. Now, one thing about he went into the natural gas. It's the same thing as what Warren Buffett did. Warren Buffett also went into natural gas pipeline. So which means that, right, crude oil price is going to go higher, right? Crude oil price is likely going to go higher because let's look at crude oil price for the quick one. Crude oil price, let's do a quick one right now. Crude oil price, we're going to do crude oil earlier. Okay, wait, where's my crude oil? Hey, wait a minute. Where's my crude? Oh dear, I think I accidentally deleted away. Oh gosh. Okay, accidentally did it away. Never mind. I can do a quick one right here. Just give me a short moment before we end this morning MAO. Okay, quick one. Once you have the template, it's very easy. Okay, here we go. All right, crude oil price has came off a little bit. Will it be going to the MA30? It's possible. But I believe that the crude oil will pull back today. I repeat, I believe that crude oil will pull back because the inventory was high. And also, I believe that the equity market will come down a little bit. So $63 will be the target for crude oil today. $63 will be the crude oil target for today. Now it's at $64.74. So we're about $1.70 away from the target. Okay. All right. Back to here itself, right? So the last one will be this. You can see over here, this is a 10-year spread and the 5-year spread. That one's earlier was 5-year spread earlier. Wow, look at it. We are now back down to all the way to minus 0.3255. That last time was in 2004. So again, that was a very low period where the market was terrible. And the time the recession was there in 2008. But now we are recession, but we are now at the lower end. It's a double whammy. The spread is low and we are having recession. So it's a double whammy here on the current market. So seriously, I put it this way, the Dow Jones can still go higher because if the Federal Reserve were to pump in more money, the Dow is going to go higher. But now we are definitely at the 9th inning. We are definitely at the 9th inning right now. And the balloon has gotten so big and so large that it will just prick at the moment as anything that could happen. So anything that's disastrous, prick it, boom, the whole thing will just go. All right. So that is my personal take right now. If you already got caught on this, okay, happy for all of you guys. Happy for all of you. Okay. All right, that will be all for today for MAO. I hope that you liked my session and congratulations to those who made money on Hang Seng. It was pretty cool to see you guys making money on Hang Seng on your own. All right, hope you guys enjoyed this morning MAO. All right, I'll see you again, guys. Take care. Have a great day. Bye-bye. All right, for those who can see MA in the office, I'll see you later soon. Okay. Okay, bye-bye.